It's about that time of day again. My name is Joseph. Wednesday evening, January 24th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and of course we can't forget about the euro this evening. Starting off with crude. Crude is bullish after a wild inventory report this morning, and a recent spike higher is telling me to look for a pullback to a hidden channel support level for buying opportunities on Thursday. The S&P is bullish after buyers bought a beautiful two-legged pullback to a key reversal line. We talked about that reversal line last night, and now we're looking at a spike in range pattern setting up with traps tomorrow. Speaking of traps, the Nasdaq is bullish after a two-legged pullback, and I'm watching for a beautiful example of what I call a grind break pattern setting up for Thursday's session. We get a target going back up to that big round number. We talked about that target at that big round number last night on the Nasdaq. We'll go into more details in a moment. Gold is bullish. The yellow metal, a strong spike higher. It's easy. We're definitely bullish, but we got to wait for one of four scenarios on gold. We don't have a lot to work on the chart tonight, so we're looking for one of four scenarios on the yellow metal for tomorrow. And of course, for tomorrow, the euro is bullish with a beautiful channel. Perfect rotation for a channel on the euro today. Pretty easy trading as well for most traders out there on the 6E. That's telling me to wait for buying opportunities. I'm waiting for a two-legged pullback into the battle zone on the euro and a retest of that high tomorrow. Boy, I got a great newsletter in store for you guys and gals tonight. We got some big moves in today's session. Finally breaking down to some of those trading ranges. We got some parabolic moves. We got some grind breaks. We got some hidden channels, right? And we're going to wrap this whole thing together and put together a strategy for Thursday's session. Before I jump in though, make sure if you're on the YouTube page right now, make sure you subscribe to the YouTube channel. That way you never miss another video. Click that little bell icon on YouTube to make sure you get notified every time I post a new video. If you like the video today, give me a thumbs up. If you got any questions about the content here, make sure you drop the comments below the video. And if you really want to stay in tune with everything that is schooltrade.com, if you really want to get the most out of your time here, head on over to the blog at sidewaysmarkets.com and make sure you join the mailing list. I'll send you an email every evening when something new hits the tape here at School of Trade. While you're here, don't forget, follow me on social. I'm always posting exclusive content throughout the week on my many different social media channels. Charts, links, updates throughout the week. Speaking of charts, how easy is this? All the charts from tonight's video. Here's a reason to go over to the blog. I'll put the link in the description of the YouTube video. Head over here to the blog at sidewaysmarkets.com and grab all those charts. How easy is that? All the charts in tonight's video have them on your computer for tomorrow's session, right where that link is below the video on the blog. And then speaking of tomorrow's session, what are you waiting for? Come out and join me. We had a full house today on the free pass. I got a spot for you. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that, right? You got an hour to spare, come out and grab that free pass and come join me tomorrow in the trade room as a guest. And if you have any questions on the way, hit me up on live support. I got live support buttons on the right-hand side of our blog here at Sideways Markets and also on the homepage at schooloftrade.com. And we are off to the races here in a Wednesday edition of our nightly newsletter. Getting ready for Thursday's session, though. Let's jump into the calendar here for tomorrow. What do we have? Tomorrow's Thursday, January the 25th, as we go into this fourth week of the month of January. Get some minor news from our friends down under. The Kiwis here at 4:45. It's after 4:45 right now, so never mind on that. No major news in the overnight Asian session, so clear skies ahead if you're trading in the overnight Asian session. But then we got quite a bit of important news for tomorrow, right? Going to Thursday's trading session tomorrow. First of all, if you're trading the London session, you get the IFO survey tomorrow morning at 4 a.m. That is most likely going to move the needle for all you London session traders. The big news tomorrow, though, will be the ECB announcement at 7:45. Now, remember, this is just like the FOMC announcement here in the United States, where there'll be an initial announcement at 7:45, and then, 15, 30 minutes later, right, we'll have the press conference. Usually starts around 8:15, 8:30, and that's where all the live Q&A comes in, and that's usually where the big fireworks happen. So be aware tomorrow, if you're on on in the market like the euro or gold, you might see some chop and slop around that news number between 8 o'clock and 9 o'clock. We'll know more about that once we get there tomorrow. And then we go into the U.S. session. We get, of course, the typical jobless claims tomorrow morning at 8:30 a.m. We got retail sales from Canada. I don't expect the retail sales number to make too much of a dent. And honestly, I really don't expect the jobless claims to be that big of a market-moving event either. I'll tell you, it's been a decade since I've seen the jobless claims really move these markets around. However, though, you go an hour and a half later and you got your new home sales, yeah, definitely going to see, right, it move the needle on that tomorrow. That will be the big news of the session. Outside of that ECB announcement, obviously, right, tomorrow morning, 10 o'clock Eastern time. We always expect 10 o'clock to be a real active time. We saw it today in the trade room at 10 o'clock Eastern time, and we're probably going to see it again tomorrow around 10 a.m. as well. Other than that, we're watching the typical 9 o'clock, right, opening bell on oil, right, or should I say 8:20 opening bell on, right, metals and currencies, gold and euro tomorrow, 9 o'clock on the crude and the nat gas, 9:30, of course, on all of the E-minis. 10 o'clock is the 10 o'clock shock, and of course 11 o'clock, right, is that transition period into lunch. The sweet spot is that 8 to 11, and of course that's our time in the trade room. I hope to see you guys there tomorrow morning, right, 8 o'clock Eastern time. We'll be there with all of our advanced members. Let's not waste any time here. You guys can schedule for tomorrow. Again, watch that ECB announcement at 7:45. It'll be more like 8:15, 8:30, and then of course 10 o'clock we get that new home sales number, and we'll talk about Friday's news, right, in tomorrow night's newsletter. Let's jump right in. We got some crude oil, we got some S&P, right, and of course we got some Nasdaq, gold. We'll wrap up tonight on the euro. Crude is bullish after a wild inventory report, right? Today, of course, was Wednesday, so we're expecting to see that inventory report here this morning. It was real quiet until about 11 o'clock, and then all hell break loose, right, in the wake of that inventory report. As you can see on this chart right now, a strong move up to finish today's session. That much strength as it goes higher tells me this is a spike going higher, and that spike going higher tells me to look for a possible hidden channel, or maybe spike in range, spike in channel. We're going to kind of play this thing out here right now, and we'll see what the day gives us here for tomorrow. First things first, you can see here, this was all the slop around that inventory report here this morning. It wasn't until after they stuffed the sellers and jackknifed higher, came all the way back down. You can see this market's been a wild one here all week, and then runs higher here. So the easiest way to do this right now is, this is called a spike. And anytime we see a spike, we expect to see a two-legged pullback and a retest of the high. Bottom line, right? So we're expecting, and we know from based on previous examples, the odds are very high that we go back to retest the high. Now, if it keeps going, same thing, right? We'll wait for the pullback and a retest of that high. So whenever we see this much strength in one direction, don't even think about selling this market right now. Wait patiently for that pullback, right, and a retest of the high. Whether it comes now or whether it comes early tomorrow morning, right? Depending on when that happens. So that's the kind of the basic root of what we're seeing here on oil. It's clearly bullish, and we have a lot of these to talk about tonight, right? So we're going to see a lot of these kind of repeat themselves. Very, very easy here. Take this high, connect those highs, bring it down. I'm going to shave off some of those wicks there, right? That way I have kind of the worst case scenario there, and now I can look for that, right, two-legged pullback off of that hidden channel. Now, one of the themes we've seen lately are these reversal lines, right? That 65.42, that's a prior level of resistance that I would love to use as a support level here for tomorrow, right? If you were watching the Nasdaq or the S&P today, you saw how well those naked reversal lines work today, right? And so we'll look for that tomorrow as well. That's another key component here for tomorrow. Another aspect of this, we definitely have a rising support trend line. If this market turns bearish, you're going to want to make sure you trade around that rising support trend line. But as of right now, it is very difficult to even think about this market being a bear market. The way the market feels right now, it feels like we are destined here to reach that big round number at $70 a barrel. But for right now, though, looking for a pullback and a retest of that high. We've reached the bull target at 66, the big round we're at 66. And let's play that game. What if price goes up? What if price goes down? What if price goes sideways? It's a strong bull market here, so obviously we'd like to get a pullback here. Most of the time, though, right, that pullback will be what we call a two-legged pullback. Come down, one leg, bust up, right, break back down. Use that, right, use that trend line, use that reversal line, use the hidden channel. I mean, wouldn't that just be a match made in heaven, right? Getting that two-legged pullback down into the battle zone. That would obviously be our dream come true scenario here for tomorrow. It doesn't need to be that perfect though, right? It could be one try, two try, moving average comes over, sellers fail, into strength, strength into pullback, right? And then back up we go, right? So seller failure, right, into strength, into pullback, another option as the market pulls back off of that low. And again, remember, one of the key components is the market's bullish. I want to try to buy at support, right? So I'm identifying support levels that I can buy with a lot of confidence in tomorrow's session. What if price goes sideways? You know, we're going to see this on gold in a moment. There's definitely potential for this market to go sideways. A lot of times when we see that much movement in one direction in a very short period of time, the market almost has to catch up to it, right? You'll notice the moving average is still way down here, right? So a lot of times when we see a real strong move to finish off the day, the following day we kind of go sideways, right? So if we do start seeing that market start to flatten out, we start seeing double tops, we see double bottoms, right? We know we have a trading range at that point. At that point now, we have really two options. One option would be a breakdown. This would be a trading range environment. As we've talked about this week so far, anytime we have a trading range, we expect to see that two-try rule below the low of that range to be a buyer down below. As you can see, I'm still going to look to buy at support even if we go sideways here. If we do keep going sideways again, right, another option we call a breakout pullback pattern. The breakout pullback pattern looks more like this. Strong move up, two-legged pullback, moving average at this point now will come over, and I want to make sure the moving average, right, will hold above that trend line, right, or above that channel high, or the range high, if you will, right? See where I'm going with this? Get the moving average up outside that range, hold that pullback, two-legged pullback, back to the top of area of that range, combined with the moving average. It's a beautiful, what I call a fake out, breakout, pullback pattern. And I call it that because a lot of times when we do pull back, we oftentimes, when it's a breakout pattern, will pull back and get sucked back down into that range, right? That's why I call it a fake out, breakout, pullback, because it doesn't take the initial pullback. It looks for that, right, that two-legged pullback, 1, 2, right, and then go. That way we can get those sellers to think we're failing and then buy into their stop losses, right, as we start to make that move going higher. Very simple technique, right, that we do every day in our trade room. With that said, that's if price goes sideways. What if the price keeps going higher here? If it keeps going higher, we still haven't seen a deep pullback. And so we're still going to keep waiting for that deep pullback. If it goes higher, a couple things you might see here. We might see it kind of hold, right, a trend line up here. I'm kind of guessing right now as far as where it is. So if that's the case, that'll be a spike in channel. Remember, if it keeps going higher, we're still going to get that pullback and that big trade of the day, right? You always want to kind of think about, if we get this much strength going higher here in the short term, eventually we're going to run out of bullets, right? We're going to run out of buyers at these elevated levels, and you'll be wishing that you save some ammunition, right? Save some risk so you can take that extra risk, right, when the price pulls back to those areas of support. So even if we do keep going higher here, right, even if we do keep going higher, let's say, for example, right, we keep pushing higher through this bull target, right, and then pull back. I'm going to take this, get that up there, right, bring that up, right, and we'll look for that pullback off kind of a revised hidden channel. Right, so if this keeps going higher, I'm not going to change my game plan, right, because we want to make sure we buy at support, right, rather than buying at resistance. It seems obvious right now this market is bullish, but I know that there's potential, right? We could turn directions here for tomorrow. You know, I mean, look at how crazy it was earlier on in the session, right? So if that's any leading indicator of what may happen tomorrow, there's a possibility we could reverse, right? How would it reverse? What would it take for me to start being a buyer here? 3 things. One is a strong move down, right? We're going to have to see something similar to this move back here. But you'll notice when they move lower, what happened to the moving average? What happened to the moving average? The bears tried to sell it, And then look at this candle right there. What's that candle really telling you? Those are stops getting run, right? Those are sellers who try to sell that pullback and then pop, 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 right? All of a sudden, those bears, they get their stops running, right? And the stops get triggered, and those bears become buyers, and you've got that short covering rally that rockets back up right to the high. So if we get that, right, if we get that strong move down, but they can't hold that pullback, right, it's going to go right back up to retest the high, just like we saw, right, in that previous example. So strong move down, that's the first thing. Then what I want to see is I want to see it hold the pullback, and it's not enough to just look like it wants to pull the pullback. We saw a good example there. I want to see it actually crank lower here. Show me some strength, because that strength is really just the sellers getting out, or sorry, the buyers basically admitting they're wrong and getting out of their positions. How do you get out of a buy position? You sell your way out, and that escalated move lower, right? That really kind of, it usually will feel like the rug gets pulled out from underneath you. It's a very strong move down. That strong move down, I don't like to chase after that move, right? Especially in this environment where you got this rising support trend line. What I'd rather do though is wait for it to start making that move off that low, take these two lows, project up to that high, and then use that, right? Use that high, right? Use that high as my level of resistance. And who knows, maybe we can play our cards right and get something off of that trend line as well. But the key is get it nice and strong, move to the downside, and then obviously targets are back down to retest today's low at 64.33. Strong move up, two-legged pullback, and a retest of that high, right? We are watching for a possible measured move, right, to a much larger target up around that $67 a barrel here for tomorrow. But obviously we need to see a pullback, right, before we can go forward from there. Don't forget, tomorrow morning, 8 o'clock Eastern time, I'm going to see you there tomorrow morning, right, in the trade room, and we're going to execute this plan together. How about some S&P? Yeah, S&P is bullish, right? Bullish here. Yeah, I know. We're going to talk about that. Bullish with a spike and range pattern, telling me to look for buying opportunities down below the range with a target going back up to retest the highs tomorrow. You can see here as I'm recording here right now, it looks like other folks are thinking the exact same thing as it just bounced off my battle zone. Buyers got their target we identified in last night's newsletter, followed by a two-legged pullback, and now we're looking for rotation back up to the highs of that trading range. I gave you guys a clear target last night, if you recall, right, from last night's newsletter. If you missed last night's newsletter, make sure you go back and watch that lesson, right? I'll put a link here at the top of the video so you can go back and see last night's newsletter as well. But most important thing, though, we talked about this as being a major target, right, on the S&P for today. And then whenever we see a major target reached, we usually expect to see what, right? That big two-legged pullback. Well, funny how this two-legged pullback, right, pulled all the way back to that key reversal line that I kept talking about from earlier on this week, right? Remember that reversal line? I said last night we didn't test it once. Don't be surprised if we get a pullback to it. Well, looky here. Everyone was waiting for that pullback, right, to that key reversal line, right? All the sellers then, of course, right, they get run out of their positions as it tears back through that moving average, right, and this sends price spiking up, pulling back, double topping, and anytime we see that double top, right, we know the deal. It's a bull move, but it's a bull spike and range pattern. So here we are right now, right? A nice two-legged pullback down to kind of the low of this range, if you will, right? Coming off of last night's newsletter. We get a strong move down, right? So there is a chance here these bears could take this lower, but I'm looking for rotation back up, right, to retest that high. Most important thing right now, spike up into a range. What do we always talk about when it comes to a trading range? One thing, right? Make sure you look for a bias. In this case, there's a bull bias going into that trading range. Second thing, two-try rule. One try, two try. Hopefully the second try goes further than this first try, and we can then look for a short-term failure and then back up, right, to retest the high of that range, and then make sure you leave a runner, right, to go back up and retest that target at 55.25 tomorrow. How do we turn, or should I say, what are the scenarios here again? Strong spike and range, one try, two try, and then back up in. What else can we do here? What if price goes higher here? Up, moving average up. What did we call this last time? The fake out, breakout, pullback. Two-legged pullback, moving average is above, right? Moving average is above, fake out, breakout, pullback. That's going to be really key because you're not going to want to get involved with this market as it runs higher here because you're going to be way too close to that bull target. One of the most important factors of being a successful trader is knowing where you are, right? Having some sort of identity, right? Knowing where I am in comparison to what the big targets are. You know, we talked about that big target area last night on the newsletter, right? And we talked about this last night. We said, listen, if it goes higher, be careful up here because you're in that area where, right, we have that big projected bull target. And of course, if you followed that advice last night, right, you stayed away from the buy side and maybe not caught the short side of the way down, right, but most importantly though, you knew better than to buy high. Now as we go looking for that retest once again, you have to know where they're trying to get to, right? So as we try to buy high here, right, as this market goes higher here, stay away from buying as the market breaks out and wait to buy that pullback. That way you're buying at support rather than buying into resistance. So that's the plan if price goes up or price goes down, right? One try, two try, back up, one try, right, or breakout, two-legged pullback, use that, right, as support as we go higher. What else here? Possibility here for a strong move up and a possible hidden spike in channel, right? Keep an eye on that tomorrow as well. We have one developing right now, I think, on the Nasdaq. We don't know enough yet to really know it. And then how do I turn bearish here? You know, what's the scenario? What's the scenario that kind of turns this on its edge here? You know, again, I've got this pegged as a two-legged pullback to our key support level from last night and then trying to go back up, right, and retest that high, right? What if I'm wrong? I mean, after all, we do have a spike in channel here, right? I mean, isn't this a spike in channel pattern? And this spike in channel patterns pulled back right back to its correction zone. So in all reality, right, these bears could easily wrestle this away from those buyers. But the key here, though, is they've got to wrestle it away. I'm expecting to see at least two tries here, right? And once I see this second try, then we're going to know a lot more about the condition of this bear market. For example, let's just say we do break down that second try. I can grab that trend line. I can move it up to the highs here. I can use this as resistance there as well. And I can then look for, right, that sell. Again, making sure you know where you are, right? You don't want to be selling into that low because that's the short-term objective for those bears, right? This will give you a chance to sell off of that low, selling at resistance, right, rather than selling at support. And then, of course, we have targets waiting down at the 25.5. And, of course, don't forget about a potential larger measured move for tomorrow. I don't think, oh, that's right. And then you got last Friday's high all the way down there at 12.5 there. So this could be a bloodbath tomorrow if the buyers can't hold it. But as of right now, right, I'm looking for a rotation back up, one try, two try, back up into that range, fake out, breakout, pull back to new highs, or one try, two try, run. Don't take the bait. Look for that, right? Look for that sell off of resistance, and then we go down, right, to that measured move from there. What a beautiful, beautiful chart. Kind of confusing though, right? Because again, you've got a couple things, right, kind of working against each other here. That strong spike in channel down, that strong spike in range back up. You know, in all reality, if you take the size of this range, I mean, this is the middle right there. You know, so we're pretty, you know, we finished the day today pretty much right in the middle of that big range, suggesting that there are probably going to be quite a few traders tomorrow that might just sit on hands until they know more of the story. Now, over to another example of a somewhat balanced market that I think is trying to make a run back up to the target from last night's newsletter. Nasdaq is bullish, and in my opinion, trying to retest that 7,000 round number tomorrow. We talked about this round number last night being a major target for the bulls, and we can see the profit taking off those highs with a perfect two-legged pullback, and now a recent grind break pattern is giving the buyers a chance to get in off yesterday's low. Keep in mind, the sellers have already tried once to retest the low, and they will likely try it again at a higher price. So watch for a possible short-term spike in channel pattern for buying opportunities here tomorrow. Great example again here, right? In last night's newsletter, we talked about that big round number at 7,000. Remember, this was a spike in channel here, right? And of course, we knew that once I got to that big round number, you're probably going to get that kickback, right? That kickback, we had that reversal line waiting to see those buyers here, of course, right, coming in and responding at these lows. That bullishness, right? That bullishness is where we start to really tune in on this right now. You'll notice this strong move up. I draw a trend line off of these lows, and you'll notice how it just kind of pulls back, right, and immediately jerks higher. I call that a grind break. This is one of those little techniques that I teach in the intermediate course. The bottom line is that grind break, oftentimes now, it's basically a move higher that hasn't allowed the buyers to be able to buy at a lower price, right? And in comes a prior swing, right? Then as the market pulls back, right, buyers are trying to buy that trap low. So as of right now, we're already watching one great buying opportunity here now to go back up to retest that high using that trap low scenario. Again, as you look left here, right, we're hanging out right down at yesterday's low. So I'm looking at this as one big trading range, looking for that move up, right, to retest that high. Again, much like the S&P, we also had a very strong move down. We have sellers, of course, looking like they want to hold, right, that correction zone of that spike in channel. So I also want to be ready, right, also want to be ready for that next leg lower. So how do we play this for tomorrow? Well, the big clue right now is right here. One try going lower, right? As we bounce off that low, the sellers are trying once, and if they can't move back to retest that low, they are probably going to go back up again and then try again. The key is going to be getting a new higher high. This is kind of a variation of what you would call the two-try rule, right? Anytime we see a strong move in one direction, we expect to see sellers pull back, right, and retest that high. We have reason to believe that buyers are nibbling here right now. So I put the blue dot there, right? Buyers are taking a nibble there as we finish up the session to go back higher. And I'm also expecting, again, right, these sellers to try one more time here above that high. This is where the big opportunity comes in for tomorrow. Watching those sellers try to sell that second attempt, I'm anticipating with a new move higher, right, to get this as a spike and channel and look for buying opportunities tomorrow off of that channel low, with a target going up to the high of the channel, and then again up to, right, that big round number again to retest that high. So again, as the price goes higher, I'm expecting prices, or I'm expecting sellers to try one more time just above that high, looking for that short-term failure, right, and then buying back up again. That'll be nice and easy off that second try failure. One try to go back to the lows, right, two tries to go back to the lows. That's if price goes higher. Now, price goes lower here. It's all about what happens in the next few moments. Again, as I mentioned earlier, get a beautiful example there of what I call a grind break, and you can see buyers have taken the bait, right? Buyers have set the hook. Buyers are clearly in this move right now. At that point, do we trap low here and run back up? Great short-term buying opportunity there. Again, at that point, trap low, knee-jerk reaction back in, then another opportunity right down off of that seller failure. Those are options for buyers. But what if this thing just collapses here? Same thing we talked about on the S&P. Mark up those lows. Mark up that high, right? I'm going to try to use this as resistance, right? There's your sweet spot right there, right, for your sell back down. Now remember, you got to be careful because that objective is at 88.25, right, for those bears on the way back down. So you got to be careful to get in before we get back down to retest that low. If this thing just collapses back down, right, now you've got to be careful because you've already reached the objective. It'll either turn into a trading range and want to sell back off that high, right? Sell off that high, back down to that low again, or, right, it'll run through that low, and if it runs through that low, got to get the moving average through. Just like that little fake out, breakout, pullback pattern, right? I want to use what was support as resistance tomorrow, and of course that will produce a larger, right, a larger measured move. Also, don't forget we've got some levels from earlier on this week, right? If this does turn into a bloodbath here tomorrow, right? If we do end up back to those lows and continuing lower, right? We've got that Friday's high, we got Monday's low. That'll be an easy bear target, right, for those sellers. So wrapping things up here on the Nasdaq, we get some great buying opportunities here in the short term for a trap low, failure, right? Trap low, a failure pattern. Those will be the two, right, best buying opportunities here. Get at it quick. And again, we're going to know this in quite a short period, not a very long period of time. It shouldn't take that much time here to get that information. If it does roll lower though, right, find that hidden channel, wait for that sell, right, and off the race as we go, making sure we're not selling into the low of that range at 88 and a quarter. I'm looking for a retest after that two-legged pullback to the reversal line. Looking for this retest out that 7,000 at some point tomorrow, waiting for my time to get in here as we wait, right, for the proper trigger. Let's continue here now. Over to the gold. Gold is bullish with a parabolic move higher today, telling us that a pullback and a retest of the high is highly likely for Thursday's session. The challenge on this chart is the lack of anything else besides price going almost straight higher today. Yes, we did get one pullback to the moving average, and yes, the buyers clearly bought the freaking dip, right? We know they did, but now we want to see this market start to balance out so we can plan our trades for tomorrow. Most important thing right now is this strong move up, pull back to the moving average, right, and another leg higher. I'm glad that we got that pull back to the moving average because that tells us that all the conservative traders are most likely already been allowed into the market. Now at this point, we're probably going to see one of four scenarios here tomorrow. Either go sideways into a trading range, right, go into a spike and channel, right? Possibly a spike and wedge. Those aren't as common, right? Possibly a spike and wedge, right? Or maybe the rarest of them all would be a flag pattern, right? Bear channel kind of pulls back, right, into that battle zone and a move back up to retest the high. Bottom line, anytime we see a strong move in one direction, I'm looking for that two-legged pullback and a retest of the high. Okay, if it gets out of control, then we'll look for the bear side, right, if we can see it turn to a bear market. Now, I don't know how much I trust this channel. The channel looks pretty good. But not a lot of trust on this channel. What I like more is I like this reversal line and I like this prior swing. These are really the levels that I'm paying attention to most for tomorrow. Typically speaking, when a market moves this strong, this fast, right, that channel is probably not going to be too useful. So I'm marking up those swings, looking for those to be used as support, right, for a target going back up to retest the high. I'm also looking for a long-term target up at that measured move tomorrow, and then who knows from there, right? Maybe we see an extension up to the 1618 from there. We'll see, right? We'll see how it reacts at that measured move tomorrow. But for right now, two-legged pullback, back to retest the high. That's the game plan here in the short term. With that, one of four scenarios, right, I'm expecting here for tomorrow. A spike and channel. Spike and channel. Spike and range. Spike and wedge. Flag pattern. These are the four scenarios. We come out of a blitz like that, right? Those are the four scenarios we're looking for. All four of these tell me to buy below swings. Buy below swings. So for example, on a spike and channel, I'm looking for that pop, trap below that low and back up. On a range, one try, two try, back up. On a wedge, trap low, back up. On a flag, flag's a little more difficult. Flags are failure below the flag, or if I can squeeze it in there, breakout pullback above the flag. Those are the two spots, right, for a flag pattern. Apparently my I lost a bit of room there on the end there. So those are the 4 scenarios, right? Very strong move on gold here. So as we pull back, right? As we pull back, we go back to retest the high. There's your trading range. 1 try, 2 try, back up we go from there, right? We pull back, make a new higher high. Find that high, bring it down to that low, buy the low. Buy the trap, right? Obviously not trying to scale, right? But I want to buy down at support levels here for tomorrow. Same thing here, right? We go back up, new higher high, but we're not making a channel, right? We start seeing this wedge forming. Stay patient. Look for that, again, look for that buying opportunity, trap low, right? And again, big target up at that, right? Up at that measured move. The hard one is going to be we pull back, we can't make a new higher high, we pull again, that now becomes my flag. Flags usually have 3 legs to them, 1, 2, 3, and then again, you've got to get below it, that's the trick, or above it, okay? The best one is the one below it, right? And the reason why is because a lot of times the secondary pattern above there, a lot of times it's really choppy because you've got sellers who are thinking it's a bear market and they're trying to sell up here, right? So it can be kind of a fist fight that breaks out above that high, and it can be a little bit difficult on the nerves because usually the candlesticks are pretty crazy looking, right? So I like to look for that buy underneath that flag. It takes some cojones, it definitely does, right? It's not for the weak of heart. Flag patterns are definitely one of the more challenging, right, environments there. So again, bottom line is I'm watching these prior swings, looking for that 2-legged pullback. That would be ideal, right? Wouldn't that be nice? 2-legged pullback into a failure, right? Failure into strength. And then from there, right, do we just go back and retest the high and then come back for a spike in range, right? Or do we retest the high, right? Keep going, right, for a spike and channel. You know, how does this thing play out? The bottom line is I want to buy at support. I don't want to buy at resistance, right? And because this thing was so strong today, I'm definitely looking at buyers being a little more aggressive on that 2-legged pullback, right, with that retest back at the high. How do we turn bearish? It's possible. It's not probable, but how do we turn bearish? It's definitely possible, right? Strong move down, strength, pullback, strength. Right, once we start seeing that strength, it'll be something very strong because it would mean literally these buyers decided to turn on a dime, literally, and give up on this market, right? It'll be really strong. At that point, find that low, find that high, 2-legged trap high, right, and look for that sell. Top of the channel, right, that area right there is usually where we're going to get that 2-legged pullback for that drop back down. Know where your targets are, right? Bear target down at that low. And then I didn't mark it up here tonight, right? But look for that prior swing, that prior deep swing, right, as another objective. We'll know more tomorrow, obviously, based on the new channel we get, the new measured moves we get. But as of right now, focus on that buy side, 2-legged pullback, retest the high, right? And then, of course, wrapping up here on another chart, a lot more to work with on this euro. Wrapping up tonight, the euro. Euro is bullish with a perfect channel, perfect rotation, and a recent test of the measured move. That tells me to look for buying opportunities using a 2-legged pullback down to that battle zone, or buy with traps on a 3rd leg up to that 25,000 round number for tomorrow. Let's see here. What's the most important factors on this chart for the euro? Euro has been great, by the way, recently. Got a strong move higher, get your bull channel. Beautiful rotation, right? Low to high to low, low to high to low, low to high, right? Beautiful rotation. Anytime we see a relatively narrow channel like this, right? You'll notice this channel's relatively narrow. There isn't a lot of open space inside of the channel, right? So the best trade you can get when it comes to one of these, right, real kind of narrow channels, we're obviously bullish, is to get a nice deep pullback, right, for that buy, because then what it does is it opens up all that space now, right, for a big profit target. So that's why I've got my battle zone a little bit lower on this chart tonight, right? I've got these 2 reversal lines, right, 1 and 1 right there. Those are 2 gorgeous reversal lines, and we've already seen how powerful these reversal lines can be on the Nasdaq and on the S&P here this week, right? And again, so you combine this, right, kind of narrow channel, right? This kind of narrow channel. A narrow channel it's almost like a parabolic move. It tells me that whatever pullback we get is probably going to be sharp, relatively steep, and probably pretty deep, right? Because you got to be thinking there's not much profit potential to buy right here, right? The top of that channel is right there. But if I can get this thing to pull back here, though, then we got a whole boatload of profit potential, right, for the move going back, right? So how do you know how sharp or how steep the pullback will be? It usually has a lot to do with the condition of that channel, right? Put yourself in the shoes of the other buyers in the market. They're going to want to buy where there's an opportunity for a small amount of risk and a big amount of reward. I can't get that inside of a narrow channel. I can get that if we get a nice steep pullback. So kind of thinking this thing through here, right? Possible two-legged pullback, right? Draw that trend line, buying into that battle zone. Target, of course, then be back up to retest that high. And at that point, we can see if we get that, right, breakout pullback through it and then up to that round number from there, right? That's definitely something that we'd love to see tomorrow. Maybe we get a 1 try, 2 try, moving average comes over, sellers fail, strength, breakout pullback, right? Failure, of course, right, being 1, pullback being 2, know where that target is, right? And then, of course, get up, right, and then grab it from there, right, as well. Those will be some scenarios for tomorrow, right, if we can get the market to pull back. Also, don't forget, anytime we see, and this goes for gold as well, right, if we pull back, retest the high, and then pull off the high, then this becomes your trading range. We keep looking to buy down off that low, right? Buying off the low, taking profit up at the highs until we see it get through those highs, which will tell us to be looking for the next leg higher. Speaking of the next leg higher, 1 leg, 2 legs, 3 legs. What if we don't get a pullback here right now? What if it keeps going higher here? Well, get some targets waiting up there just shy of that 24,900. If we do continue to move higher without that pullback, just remember, if we reach a measured move, we normally get the measured move, the pullback, and do it again. So if we do keep going higher here, and we get that measured move, right, don't chase after it. Wait for that pullback and do it again, right? Chances are that'll be a much easier trade and a much more lucrative trade waiting for that pullback rather than, right, trying to force this stuff up as we go into that level of resistance. It's just like we talked about on crude oil. If price keeps going higher without a pullback, that doesn't change anything. It just means I need to stay patient and wait for that pullback to happen. And anytime we see the market just continue to push higher, I always start looking left. I always start finding those prior swings, right? Start planning out those prior swings, start finding those prior reversal lines and use those, right, as support to buy that dip and then leave that runner. At that point tomorrow, that big round number becomes a definite target here. How to return bearish? Strength, pullback, strength, you know the drill, right? Find that new low, bring over the high, 2-legged pullback, right? And sell that sucker back down again. Target for the bears back down at that low. All right, guys, I hope you guys found value tonight. Hope you learned something new, right? Talking about, right, how do you know how deep that pullback is likely to go, right? Hope this was a great investment in your time here this evening. I hope you subscribe to the YouTube channel. Hope you'll share it with a friend. Hope you'll drop some comments below there with some questions you might have. And I hope you'll also invest some time, right, by learning more about our 3 levels of membership. I'll put the links in the description of that YouTube video. We got beginner, intermediate, and advanced classes here at School of Trade. We have helped over 3,000 clients here at SOT. 10 years now we've been running this trade room here at schooloftrade.com. 10 years, right? The average trade room out there on YouTube these days is about 6 to 8 months, right? So we've been around the block for a little while, right? We're clearly doing a lot of things right for all of our clients. If you want to learn more about what it means to be a member, we get a great free trial on the homepage here at schooloftrade.com. If you're on the YouTube channel, there's a link in the description. If you're on the blog right now at Sideways Markets, look to the right. There'll be a link on the right-hand side of the page. I have taken up way too much of your valuable time here right now. Thank you so much for tuning in. I'm going to come back and do it again tomorrow, but hopefully I'll see you tomorrow morning, 8 o'clock Eastern time, with all my other clients in the trade room, right? Where we'll execute this strategy together. Don't forget, be well out there, be nice with it, will ya? And be here next time. Adios, amigos.